Hey guys, this is Julie. Gonna just take a quick overview of the PT oscillator and how we can use it to try to figure out where the market might be heading to. Um, so this is the VIX on a daily bar, and you can see that I've got a bar extending up into these sideway ranges, and the sideway ranges are time periods. And so my 1 day um, realized volatility line is poking above the 1 day historical volatility. So that distribution, the normal distribution that we've been inside of the entire month of June, never has broken yet, has been bounded by this white line, my first weekly one level, which is a 5 day. And that gets broken a lot, but it can also serve as support resistance. So, but the 5 day, and then I have a 7 day and an 8 day. So those are my little ones in here. Then I've got a higher time frame that you can see that it comes up to a lot. And this is your, wait for it. Oops, crap, sorry. Try this again. 14 day before it flipped off. So 2 weeks. And then it gets to the twos. So here's that 5 day two. And if it breaks this 5 day two, it usually, I mean, like most of the time, it'll come back in. So you can see all the way from March. Really, there was only a couple of times in April that they broke the range significantly. And that was during the tax period. You can see here on the ES chart that it broke through our weekly threes, the 7 day and 8 day threes, and it broke out to the downside. And without looking to see where the monthly, quarterly distribution is, um, you can see that the volatility, the one period vol, just ran up to these threes. There's your 7 day three, and here's your 8 day three. So between the 7 and 8 day threes, that weekly range, it stopped. And that's pretty normal. It'll, the 1 day vol rarely gets above that 8 day three. It can happen, and it has happened, but it's very rare. Like here, it poked above it just briefly, but most of the time, I mean, that's it for 1 day vol. 1 day vol, well, here, this was that COVID, right? No, that wasn't COVID, that was another March level, and it went up almost to my uncle line. And this uncle line is the 37 day three. So the VIX volatility is no more than 37 days, right? So there's your 37 day three. And where do I get that information from? That's on your VIX facts, FAQ FAQ. So no fewer than 23 days for the calculations of the distribution, and no less than 37 days. And these are using SPX options, but so we can put up our distributions using, that outer level 37 day three and say that should be it, right? So by and large it is. And by and large, these other areas will hold the price. There's your 5 day three, right? So here's your twos and threes. So this little period here had a in 2023 had a big excursion out, but otherwise your weekly three, your 5 day three holds it, and this one actually went up to the 7 and 8 day, 5, 7, 8. So there's your for your expected range. When you get up into these nosebleed sections up in here, you can just figure that the brakes are going to come on from the market makers and the dealers, and you might be looking to take your profits around there, is what I'm trying to say. If you're trading out, participating with that volatility push. Otherwise, it's fun to have the 1 day realized volatility breaking out of your normal distribution and see how far they get. And often they'll go to these same standard levels over and over and over. I mean, the market is set up like a bell curve, and that's what my indicator does. So we can pretty much track on a daily and a weekly basis. Here's a weekly range going from the 23, 30, 37 day, right? That's just like the VIX fact. So on a weekly range, you can see that it stays inside the weekly distribution most of the time. And when it pokes out, you know, the algos try to reach these ranges. So here's the 23 day 2, here's your 30 day 2, and here's your 37 day 2. And here is your 23 day 3. So you can see where they pin the pins are, or where they sell the vol sitting up there, and they're not going to let it touch their risk, right? That's where all the institutional money is. But if you want to, time your trade, if it breaks these ones, um, see, this had a lot of room to be able to get up there. These twos were much closer, and that's what caught price on the weekly range. So each one of these bars is now a week going out. So when you see that you're getting near a 23 day 2, you can say that 68% of the weekly range on a point basis, and they may not, on that VIX calculation, they may not let it get much higher than that, is what I'm trying to say, spit it out. So with this little bit of knowledge here about ranges and where you are on your daily term and now your weekly term, we can come into the market and do our day trading and try to figure out, is it a good place to take your profits as futures traders, or maybe reverse, right? So on your just your threes alone, 7 and 8 day, here was the 7-8 at the 37.3. What a great spot. November of 23. And that's what sent this whole rally up. Um, Here we got to the 37 day 3 in December, and you can see they were pinned. They were pinned here, would not let them get above that. And there's a reason they pin them, because that's where their risk is. So you see all my weekly, daily, monthly, quarterly levels, but narrowing your focus to these daily, weekly time frames with that monthly 37-day three on the outside of it can really help you if you're going to be trying to position your trades for maybe selling premium, or time it so that you can put a trade to the target, trade to these boundaries, or take try to get a reversal off of it. Maybe you know just start paying attention to these levels a little bit more. 7-8 day and 37-day on the ES. All right, that's all I have for you today. Let me know if you have any questions. We'll have training tomorrow since today was a holiday, and I'll see you then. Thanks.